What's up, everybody? Merry Christmas and Happy New Year to everybody out there. This is Even I Can Trade coming in at the tail end of 2023. And I thought for this video today, I am going to do a recap of, what I've learned this year in 2023 and also include 2022 in there. Kind of talk about the successes, the fails, where I'm trying to go in the future, and what adjustments I think I'm going to make going forward as of right now. As an options trader, you all know that I believe that you have to be very flexible and on your feet with this stuff. It is a continuous learning process to refine and adjust what you're doing to find a lane that is going to work for you. And that can be a pretty long process unless you get lucky. And I am not a lucky person, so it's a long process for me. So in this video, I want to talk about, what the results are or what I've come across this year and how I've done and what I'm going to do going forward. And if you stick around until the end of the video, I'm actually going to talk about how we've done in 2022 and 2023. But first, I want to talk about some of the things that I've learned based on my trading and what I'm going to implement going forward. Okay, so if you do like this content, I would ask that you like and comment below so the algorithm can start picking up more of the videos. What you've done so far has actually really helped out a lot. The channel is starting to grow at a faster pace, so I really appreciate you. And also thank you to my newer subscribers. It looks like I'm getting a subscriber maybe like once every day or so now. And, that is just building upon itself. And, I thank you for that. And hopefully we can hit our stride here pretty soon as far as growth, because I think this content is very valuable. I give it to you straight, man. I give it to you straight up, no chaser, from the perspective of a person who is not rich. I don't have a lot of money to be thrown behind this stuff. I'm trying to make it just like everybody else out there that I'm trying to reach. So we're all in the same seat. So the first thing I want to talk about is using our profitability finder analysis. And one thing that I've changed is I've gone away from using 5 wide spreads to using 10 wide spreads. So now every contract requires $1,000 to trade. And the reason for that is a couple reasons for that. I find that 10 wides are a little bit easier to fill. They give a little bit extra cushion when the market goes against me, so that my stop loss doesn't trigger quite as quickly. There's less contracts to deal with, so there's a lot less problems getting filled, later on, which I do have adjustments built into my plan, but I do find 10 wides to be just a little bit easier to work with at this particular level that I'm at, around the 5-10 contract range right now. So it's just a little less wieldy. Now I do try to trade just about every day. Now, one thing I've gotten away from is trading on Fed days and CPI days, high, where we know that there's going to be a lot of potential volatility. And right now in this market, it's going to be Fed days and it's going to be CPI announcement days. So we are taking breaks on those days just to ensure, because we haven't been very successful on those days when it comes to our win percentage. When you compare that win percentage compared to the rest of the days, it falls very sharply. So we're just going to skip it and take it out of the equation for right now until it's no longer a factor. Okay. So taking out those days, that's going to remove probably maybe 15 trading days or something like that away from our numbers. So what I'm going to do is I'm just going to change this to 200 days and just call it like that. Okay. So my win percentage is pretty high. I'm going to show that here in just a moment because we track all of our trades on TradingView, and our win percentage is pretty high. I didn't go back and calculate the exact number, but I'm going to leave a nice margin of error. I'm going to say it's 80%. It's higher than 80%, but I'm going to say it's 80%. And I'll go over the reason why I'm using 80% specifically in just a moment. Our average win, I'm going to clock that at about $15 per contract. Now, I trade both sides of the market. And when I trade both sides of the market, I generally trade between 10 and 15 cents on each side of the market. I don't get a trade in on both sides of the market every day, and I don't get a 15-cent trade in every day, but I do sometimes. So I average somewhere between 10 and 20 cents credit per day on a trade, just depending on how the day shapes up, if I can get filled or not. Okay, so I'm just going to pop in 15 here just to give us an average of, what I typically take in on a trade. Now, this number, I've been playing with this number a little bit. Right now, before this video, I was messing around with it and I kind of landed on a $50 stop loss, which would be a 50-cent stop loss. So I'm going to come back to this, but that's where I'm at based on this particular analysis. So I'm trying to do worst case type of stuff here. That's going to put our winners. We're going to have 160 successful trades throughout, the year. And we're going to have 40 losers throughout the year at our stop loss number. Okay. So the total win is going to be about $2,400. Total loss is going to be about $2,000. Assuming that you're only doing one contract, that's going to give you a profit expectancy of $400 over the year for those trades. Ratio, that means that for every 4 trades, you're losing 1, or every 5 trades, you're losing 1, with an annual expected profit of about 40%. That's right where I'm trying to be. My goal is about 30 to 50%. So it's right in the middle of my target. So the reason why I did 80% is because this is going to give me 1 loss per week. Okay, so that is much higher than where I'm at right now. I think I'm losing a trade maybe every 2 weeks right now, which will put me at about 90%. But I'm not totally sure because sometimes there's more than one trade loss in a week. And then sometimes we have pretty long runs where we just don't have any losses. So I want to err on the side of caution and say our win rate is about 80%. Well, that's going to inform what our stop loss should be, because if my stop loss goes higher than this, then our profitability goes down, and it can only go down so much before we're in the red. So a $50 stop loss is going to put me right where I need to be as far as my other numbers. Now, my stop loss right now that I'm using is higher than this. I actually started at $1.20, which would be $120 stop loss. And I've since ended up, I think I'm at 80 cents or 60 cents. I think I'm at 80 cents right now. And the reason why I wanted to take another look at this, let me see. Yeah, the reason why I wanted to take a look at this is because I feel like the losses that I take when I do take them are really holding me back and keeping me at the same level over time. So it feels like I'm kind of running on a treadmill, kind of going back and forth with the trade, so I have a nice win streak, then I take a giant step back, or a step back that's much bigger than it needs to be, and it puts me back too far to where the next time I build up, it's about time for me to lose another trade again. So it just feels like I'm sitting on a pendulum instead of actually making progress forward. So this number is very important right here as far as that's concerned. Because if this number is too high, you're definitely going to be on a treadmill and backsliding. And I feel like right now I'm on a treadmill because my numbers are kind of staying the same. There's other factors into that with my account specifically, because this year I've been experimenting on other trades as well. So like, I'm doing the wheel trade, I'm doing, other things on the side, and that has an effect on my overall account value when those don't work out. So it could be that is playing into it, but I'm not sure. So I'm going to err on the side of caution here. I feel as though if I think back to it, a $50 stop loss should be okay, because usually when the trades work out, they don't get this close to in danger on a whole, right? So I'm thinking that this will work out. If this doesn't work out, I'm pretty confident a $60 stop loss will work out. Now, if I enter $60 in here, it puts us at zero. So you can see we don't have a lot of room, a margin to mess up, right? So it really does need to be at $50 if I'm going to keep an 80% win percentage. But I think the win percentage is higher. So you can see if I boost this up to 85 and then put in a $60 stop loss, then that works very well, right? So like I said, I'm erring on the side of caution for now until I can confirm that win percentage number. I'm just going to try to go with a $50 stop loss and see if that triggers too often. Okay, so we'll try 50, see if that gets triggered too often, see where we're at. I want to make sure that we are below one loss per week. Okay, I want to make sure that we're below one loss per week. That's very important, and that's something that I can track in my head and kind of just notice how many. I can look back at the week. Have we had any losses that week? If we hadn't had any losses that week, and that's pretty consistent, then I can up this stop loss number to maybe $60 or something like that. But I want to watch this going forward, because mathematically that should work. And I have to be a Nazi about this right here. We can't have any slip ups. And that is a danger as well, because if we have a slip up and an overnight trade gets caught beyond our stop loss, that's going to factor into our numbers as well. So we have to watch that. But that's what I'm going to be doing going forward and seeing how these numbers work with us. So I'm just going to adjust our stop loss down to $50. Going to watch how many trades we lose per week. And, this should give us about one loss per week and still come out on top of our numbers. Okay. So let's take a look back and see how we've actually done. So this is going to look like complete chaos. I'll clean it up a little bit, but this is TradingView, where I track all of my trades and do all of my analysis and everything like that. This is the SPX, S&P 500. And if you watch my videos on a regular, you should know that this is kind of how I track the trades at the time that I put them in. So you can see the entry point, you can see the strike price, and you can see the level that I don't want the trade to go beyond using this arc. This arc is a pretty good representation of time decay. So as time decay happens on your trade, your stop loss number is going to arc away from the market all the way up until the strike price. Okay. So if the trade moves against you very heavy early on, it's going to be different if it moves against you very heavily later on in the trade. All right, so if I go back, this past week we did have an L right here. The market waterfalled on us and called my trade, caught my stop loss literally maybe 10 minutes after I put in this trade. It's pretty crazy. I probably shouldn't even done this trade. This is it's one of those things like you just, I don't know, you freeze because I've seen this before, and like there's two sides to my brain that fight, that say, ooh, take advantage of this big drop. The market's finally moving. We can get a nice fat trade in or something like that. Then the other side says, hey, wait, don't get in yet. Wait for this thing to finish. So it's like FOMO. You got FOMO, and that's fighting, your knowledge. So I've seen this pattern probably 3 times. This looks just like the flash crash, the famous flash crash. If you look that up, I recognized it, and part of my brain's trying to get ahead and trying to catch the bottom of the market. The other half of my brain is saying, hey, wait for this, whatever this move is, to finish and catch the other side of it, even though my position is going to be worse than it possibly could be. And the FOMO side of my brain went out, got in this trade, and got smacked for it, right? So we did have an L this week, but all our other trades were successful during this time frame. Going back a couple of days, I think this was Fed Day. You can see here we didn't have any trades, so we skipped that. I can just delete this. I don't need this. So we can skip that. And I'll delete this too, clean it up. So, and I guess I can delete this too, and this too. Jeez. Yes. All right. So Fed Day, you can clearly see the spike in Fed Day. So we weren't trading either of these 2 days. I think it was like CPI and Fed Day back to back, something like that. But good thing we did skip it, because we probably would have gotten taken out of our trade here if we did on the call side. If we were on the wrong side of the market, you can see our calls, our general level was right here for plenty of days beforehand, and it shot right through all of that stuff. So I did get in a trade after the press conference was over. It was fine, all that good stuff, and we went a good while without losing a trade. But here we got 2 back-to-back that the market whipsawed us. So I guess you could, substitute any of these trades right here for a loss and say we lost, one during this period right here, whatever you want, however you want to think about it. We got another pretty close by trade loss here as well. So this is 3 trades lost in short order. Not fun. I think this was a roll, as a matter of fact, where we saved a trade. But yeah, so there's that. And in here, I've got some of these dotted lines back here. This was like a long-term experiment, and the long-term went against me as well. I think this was another Fed Day where it was like, don't trade or something like that. I think we actually kind of got lucky here, really, because if this was a Fed Day, I probably shouldn't have traded at all here, but I put in a put that was successful because the market went the other way. But you can see that we don't really have any losses during this period. This is the period where the market was going down. We were staying on the put side, staying ahead of the market. Started to try to get some calls in there as well. But back here, we've got another few losses back to back. We got another, 3 losses back to back. I think this is a roll into a loss. But 3 losses back to back. So that's just how it rolls sometimes when the market does what it wants to do. A short period, maybe like a week and a half of wins, and then another, a couple back-to-back losses, right? So this I need to get better at. I definitely need to get better at the back-to-back stuff. I think I actually have. I think all these back-to-back losses made me switch to 10 wides. I think that's why I switched to 10 wides. And since I've swapped to 10 wides, Haven't really had any back to back because I think these were still 5 wides, and I swapped to 10 wides somewhere around this area, and I've had better success since then. But yeah, I don't like these clusters like this, right? I don't like these clusters like this. And that hurts because this is basically almost a month worth of losses in 3 or 4 days right here. So that means I have to be perfect for a month to make up for this. And it's just not like that. I think here's where I started to track on the actual sheet itself. So if I count all these up, I probably would venture to say I'm at maybe like a 85-ish to 90% win rate. But I'm not sure, so I'm just going to go with 80. Okay. So with all that said, I think I'm doing well. I just think that I have to fine tune the stop loss part of it to keep the money from running out the back door. I think once I get that down, then the gains will start stacking up. If I zoom into these, I think it's kind of hard to see from just the graph, but I think for most of these, they won't be in danger of that 50-cent stop during the trade. So like say this particular trade right here, where we put in the trade, the market goes against us immediately. I don't think that could be enough to trigger a stop loss if the stop loss is shallow enough, if it's close enough, but I don't think that would have gotten to 50 cents. But if it did, that would have been a loss right here very early on. So this is what I'm afraid of, is if our stop loss is too close, then something like this is going to take us out before the trade has any chance to mature. Another one is this trade right here. This one definitely would have hit 50 cent on this particular trade right here, had our stop been that close. So stuff like this worries me. I'm gonna have to see how this works out in actual trading, and I'll try to keep an eye on it and manage it until I get a comfort level with it. But for most of these, I don't think it would have triggered. I don't think it would have hit 50 cents early on or during these trades. This one would have hit 50 cents right here. This is pretty dangerous right here. So that would have been a loss. The rest of these are pretty tame, except obviously for the losses. So there's maybe, no, that's too deep into the trade. So I say I would have picked up maybe 3 more losses than I already had. But again, these trades were different because I was trading 5 wide. So it's really hard to say what I would have got with a 10 wide anyway. And I think I was getting more premium for these anyway. So the whole setup would have been different anyway. So who knows? But we'll monitor it and see where we're at. But I think that's the only adjustment I really need to make, is the stop loss adjustment. I think my sense for when to put on the trade, which is actually the most important part in my opinion, is really sharp. I think I'm putting on pretty decent trades most of the time, as far as timing the trade, where the market is, where the market sits, looking for the patterns and everything like that. It's just that stop loss piece. So we'll work on that. I think I'm going to also stop running experiments on the side and just focus on these spreads as well, because I don't want those to kind of affect this account anymore. I think I've proven what I needed to prove, or I saw what I needed to see out of those trades. So I think that I'm going to just stick with the 0 and 1 DTEs going forward this year. I've proven the wheel trade. So that is the trade that I want to try to move into once this trading is successful and builds up, where it needs to go. So I've proven to myself I know a couple securities I can do that with. I've done what I needed to do with those. The longer term trades, I guess I just have to open up another account or something like that if I wanted to do those, because I just don't want it to interfere with this right here. And it is right now. So I think I'm going to just focus on 1 DTEs and 0 DTEs for right now, unless I see something different. Okay. Or at least for a while till I build up the account. Okay. Because I feel like I'm on a treadmill. Outside of that, I don't know what I don't know. But I think based on all my experience and everything that I've run these past couple years, I think that it is I'm almost there as far as creating something that, when I say almost there, what I really mean is a trade setup that's going to survive multiple different markets. As you can see, we've gone through down markets and up markets with this trading style and survived both pretty much just fine. It doesn't matter if the market's going down, trending down, if it's trending up, we're still in there. If it's going sideways, of course, that's going to work. But even when it's trending up like it is right now, we're still able to stay ahead of it. Trending down, we're able to stay below it or wherever we need to be. Look at this stretch right here. It was a great stretch. We can handle reversals. Like this right here is a reversal. It was a little scary, but we got through it. We're not trading on Fed days. We're not trading on crazy days, trading on crazy announcements. So we're avoiding the obvious bad stuff, and we're just going to let the market slap us in the face by surprise. We're not going to know that the punch is coming and then get in front of the punch. Just something it's going to survive all kind of market cycles. We survive low volatility, which we're in right now. This is extremely low volatility that we're trading in. We survived high volatility, this was a high volatility period right here. So this is a very adaptable strategy. We still came through 2022, which was nothing but the market falling all year. 2023 was a pretty aggressively pumping market for not the whole year, but a lot of the year. And we're still trading. We're still profitable overall. So yeah, I think that'll work. So that's my kind of change. It's not going to be a big drastic change for right now. I've got my systems down. I've got my technical indicators that I want. And just to go over that real quick, I've got my stochastics, which I've always used. This new indicator down here, the CM Williams VIX fix, is pretty interesting because it highlights when the VIX is spiking. So that could indicate a possible entry for a put. So I've kind of added this into the mix as well. I've got my expected move. So I haven't really gone over this. I'll touch on this actually right now. So what this does, this sigma expected movement indicator, what this does is it adds these lines to the chart. So it's kind of like pivot points, but it's different. So what it does is it tells you basically where the trades would be, the optimal trade would be if it's there when you actually go to the options chain. So it's telling me, without me having to do all kind of math and measurements and everything like that, I'm probably going to want to trade right here for a call on this blue line right here at 48.29 and right here at 46.65 for a put. This is basically 2 times the expected move currently. And this adjusts throughout the day. So I don't have to do all kind of measurement and math in my head to figure out, okay, what's 2 times the expected move, blah, blah, blah. It's kind of just right here on the chart for me. So I can see it visually. I can compare it to my last trades to see, am I going to get better or worse than my last trade? Does that correspond with the movement of the markets? It just saves me a lot of time. Okay. So this is the expected move, basically, this yellow hash right here. And this is 2 times the expected move where I like to trade at. Sometimes the market doesn't give me these trades. Sometimes, a lot of the times, I would say most of the time, if the market is moving towards, this one or this one, I'll be able to get a trade off on that side of the market and not on the opposite side of the market. But it definitely helps me. Now, if you want to get this particular indicator, you're going to have to modify the settings a little bit and modify these inputs. This is what my inputs look like. I had to play with it a little bit to get it to where I wanted it to be. So this is what my stuff looks like. If you want to copy it, there you go. Just pause the video or screenshot it or whatever. But that's my setup. And I just took off labels and stuff like that because it actually has more stuff to it in this table down here. I didn't need all that, so I just took it off. So there's that. There is this RSI Bollinger Band thing right here. Kind of just helps me keep track of where the market is in relation to where it could be. And there's, of course, my pivot points that I already talked about. So that's it, guys. I am definitely going to try this. Try to keep my stop loss at about 50 bucks, 50 cents. Hope that I can keep my losers down to an average of 1 per week. And combination of those 2 things should get me moving in the right direction. All right. So if you like the content, please join me on Discord. I need some more people in the Discord that are actually going to talk, because you guys do not talk. It's literally just me sitting here talking to myself all day. So come on in, give me some conversation. Don't make me look like a loser. I know that you guys read this stuff, and I'll put my thoughts in here, all that. And I know that you guys read it and see it and appreciate it and everything like that. But imagine if you were me just sitting here talking into the void. So give me some conversation, get in there, get some chats going, ask questions. And yeah, let's get it going, guys. All right. Other than that, here's to 2024. Hope you have a prosperous new year, and we'll see you later.
Don't forget to like, comment any questions below, and hit the bell icon for posting notifications so you don't miss out.